Ladies and gentlemen, 365, and we are back. Recording has started. I hope you guys are doing well. Welcome to another analysis of pound JPY. Doing the long wave analysis. I've been doing a lot of these assets. Please don't forget to subscribe to the channel, hit the notification bell so that you can get these videos on time. I'm trying to keep them as short, they're unlike my 2-hour videos, asset by asset, however. So just to keep drilling in the mechanism, the back testing, the areas of value, the logic and the rules behind the stuff. I'm hoping that as you see this asset by asset, you start to compile your own things. Certain assets are moving together, certain profile is still alive. Supply and demand hasn't changed since 1979, 1972, and so forth, right? All these basic truths are absolutely important for your trading, for your confidence, for the thing that you're going to need to lower down your trading psychology tilt, right? When you become more mechanical than emotional, and you become more mechanical by first of all mastering the basics, mastering that module 1, mastering the rules, so that when you can say those rules in your sleep. What's an imbalance? What type of areas of values? How many supplies and demands are there? What do you need to take a trade? How does multiple time frame analysis work? What's price fractality? Price is everything. When you understand those things literally in your DNA, in your blood, then all of a sudden you start to see the charts for what they are. Right, so today's asset, without wasting time, is pound JPY. I just want to remind myself to remind you of where we were last year with pound JPY. So I'm going to go straight to the governing time frame before we really break this thing down. I can see there's no supply here. Maybe it's a weekly supply. But on the governing time frame, I see I've got buys. And I remember we spoke about how markets had to break this area, and markets didn't, right? At least last year. In fact, I remember a long-term consolidation. David is there, 2022, right? Massive, annoying consolidation of price. I thought this was going to break, and it didn't. And we had sell pressure. I was not in any of the sells. I really was just interested in these long-term buys. And yes, swing trades, buy setups that we set up last year got hit in January. And so I told you guys, if there's any trades that I'm in right now, once again, it's not because I was actively secretly trading. No, I just had my pending order set with you guys in the war rooms. And price did eventually come back to honor that, right? So this is literally money that I made while not looking at price. And it's just been beautiful. I am obviously, by the way, considering not closing pound JPY. I will. I'll probably lock profits this Monday. Now that I finally got to this asset, look for 1:3, 1:5, 1:6, and then lock profits and just allow price to keep running. Because once again, unless if you see something on the 3 months time frame, right? But once again, for me, there is no real governing supply here play. Markets failed to create a governing supply in the recent leg of price last year towards the end of December 2022, which then tells me that why close? Why close? Why close? Why close? If you guys remember that book by Rob Booker, Adventures of a Currency Trader, Craig goes, why? Why would you want to stop a good trade running, right? Why? And I've got the book right close to you because I've already started a TikTok series for you guys, right? Which much shorter videos, and I'm starting on breaking down this incredible book, Adventures of a Currency Trader by Rob Booker. So if you're on TikTok, please take the time to look for me there because I haven't dropped those videos also yet. But as of next week, you are going to see some interesting stuff, right? I'm not really big on all these different platforms. So I'm just trying to remember what I'm called on TikTok. I apologize for any noise in the background, but I think it's 365 Trading Academy, to be honest with you. Yeah, find me at 365 Trading Academy, yeah, on TikTok. You will enjoy that stuff, right? I'll try and put some of those videos on YouTube. But anyway, Craig later on in the book, right, is one of the very first people who the protagonist in the book sits down with the first profile professional high portfolio trader. And the first lesson from page 35 all the way to about page 40 something. That whole dialogue is about learning to ride your profit. Some of you guys, most of traders, most of retail traders have no idea how to ride their profits. And so you see a little bit of money or a lot of money, depending on the lot size and how long it's been holding, and you think, oh my God, the answer to that is I should close because not closing is greedy. That's how people are teaching trading psychology out in the streets. Not closing a trade that is in line with a trend. And if you've mastered module one, you know that the primary question in my course, I spend hours and hours and hours and hours, 2-hour lecture videos teaching you to answer one question: where is price going? We never start the course with where to enter. We don't talk about stop losses. We don't talk about pips at the beginning of our course. At the very beginning of our course, we profile our assets to understand where is price going. So now when these cheap coaches tell you that trading psychology rule number one for trading psychologists, do not be greedy, and you ask someone, what does do not be greedy mean? It means you must close your trades, right? Don't stay in the markets for too long, make money and go. They are talking bull crap. How is it possible to then say, you know where price is going, there's an uptrend, we know that markets have to get to a valid supply, and the one in front of me is all the way here. I know price has to get there. I am not the oracle. I don't know when price will get there. I don't know if it's going to get there next month, next year, in the next 2 years. I don't know. But I do know that if I find a valid safe demand that is in a nested zone, I have high probability odds in thinking markets are going to get up here. Why? I've back tested this so many times. There's a probable rules of supply and demand, and that's how it works. How is it then greedy for me to close a trade that was opened in January 2023 when price is only halfway through its journey to where I believe markets have to go? That is not the definition of greed in trading psychology. That is absolutely stupid. How do you get stopped out in price? How do you guys get stopped out in price? I get stopped out in price. For me to get stopped out in price, I let price run its course. That means I fully accept the maximum exposure of risk that I've put in. I don't intersect price. I don't stop price halfway. I let price come all the way to my stop loss. And the same mindset, and most of you do that, by the way, at a trading cycle, your tilt, that's great, by the way. Allowing you're hoping price will turn. You're hoping price will literally turn. If the zone is invalid, if the rules are broken, then you are greedy. You want something from the markets that the market is not designed for you. That is the definition of greed in trading psychology. Greed is when you break all the rules, take all the shortcuts, and still expect profitability. Greed is over risking a tiny account and expect profitability. That is greed. That is not greed. Getting the most out of your best trades. This is not me talking. This is a direct quote from the book. Getting the most out of your best trades is not greed. It is being smart. You let your worst trades run to a loss. Why not let your best trades run into mad, psychotic profitability? And it's just an interesting thing to consider, right? So pound JPY, for the most part, nothing crazy in the way. We've got a massive retracement zone, right, which is the supply that has just been the gift that keeps on giving, right? It's really just been an annoying supply. 2022 April, June 2022. Next big attempt was in October 2022. Another one in December 2022, and now between April and May, price will have arrived there again. And you can see the October supply did create a fresher supply, did create a basis, did run into some buy levels, into a buy one. And yeah, markets then rallied up. And then somewhere in here, by the way, is a new demand, and then another new demand, right? So there's the type of structure you want to see. Look at previous structures. The price was coming up here, it was way too parabolic, right? No clean distribution. Price came down, broke through any type of indication of an order block. Look at how when price came back here, very weird long straight candlesticks, just an indecision candle, slight engulfment, held price down a little bit, but overall clean distribution on the supply sell side. Price broke out, right? So this is what they call pain and structures, flag structures, whatever you want to call them, right? They're quite consistent to the downside. But now, when you look at this new day, right, you've got a clean engulfing pattern. Markets comes back, distributes, adds more buys, right? So if we can continue with this new line of doing things, continue with the protection of the lower buys by adding higher buys and by adding better order blocks and areas of value in a distributive trading manner, then it's going to make it very difficult for sellers to dominate again. It's going to make it very difficult in 2023 for sellers to dominate again. And if you buy any of these war buys that we spoke about, where price is still kind of like independently bringing along, and you caught in smaller buys there, then we should be fine. We really should be. We're looking at a long term. So we'll see how this January goes all the way down here. We'll see how this works out for me and whoever has their pending order still running, right? But this is the pain of being a swing trader. You watch your profits come down, you watch them go up, watch them come down, watch them go up, right? So I spent too much time on this. Let's quickly break down pound JPY with fresh eyes, fresh look for 2023. Remember what I said. Stop lying to yourself. You're greedy when you break your trading rules. You are not greedy when you literally understand your trading rules. That's the only rule in trading. If you can honor your trading rules, then you are a trader. Full stop. Doesn't matter the results. Don't worry about the results. Stuff generally averages out profitably for trade. And I'm talking about all types of traders. Even you, my brothers and sisters who love indicators, even you, support and resistance traders. If you understand your trading system and it's got data, it tells you that you will be profitable 40% of the time. And with this type of leverage, you will then break out profitably overall. Even if the trading system loses 60% of the time, this is how, if you've done that type of mathematics and you now know what it costs to run your business, keep to your rules. All right, so this is pound JPY on the 12-month chart. In front of you are candlesticks that date all the way back to 1987. We could have used a different broker. We could have gotten more data. I'm using Saxo, but if we go to ICE, we might get more. It really wouldn't make a difference if there isn't, right? I'm just saying different brokers give you different pictures. Look at this. See? Right. So this goes all the way back to 10 years, even further, 1975. But I guess the same story, right? Is sell profile asset, man. Right. So price has been dropping for a very long time. And like AUD, remember earlier on, my last video that you watched just before this one, for those of you who are subscribed and the notification bell, you will notice that the last video that we did was AUD JPY. Isn't it interesting that it was very similar? Isn't it interesting that it looked like this? That there was some point where markets came and consolidated at the bottom here, right? And this is the price seems to now be recontesting space to the upside, right? Well, what would a good trader do with this information? Note it down in a trading journal and find how much this pair correlates. How do you do that? I've forgotten, man. What's the website that I taught you guys last year? I haven't forgotten. Mine is just gone blank. There's a market correlation. If my FX book, that's what it's called. My FX book. You go to my FX book, and you draw out some serious market correlations, and then you come up with rules, right? So some traders have different rules. Some traders want 60% correlation, 80% correlation, 90% correlation. Can it be random? It can't be random. You have to back test the type of correlation that exists. So if I come here and I'm looking for this pound JPY, right? So if I say, look, pound JPY, what correlates with you the most? Or rather specifically, what's the correlation between AUJPY and pound JPY? I used to be able to just tap once and open stuff. I'll log in later. Just give me the data. Yo, I'm so out of touch, man. I haven't done since such a long time. What's going on? Right. So let's find AUDJPY here because it's just taking time the old school way. Why is this stuff upside down? What's going on? All right, there we go. I apologize. Viewers, I apologize. Right, so I'm opening pound JPY and then I'm going to go to correlation. So pound JPY has a 91% correlation with euro JPY. I can't see AU JPY anywhere. AUD JPY. Can anyone see it? Later. No, I can't. So the charts just move very similar, but it doesn't really pick up, that it's a major big deal for this pair. But they really move very similar. They really move very similar. So The highest correlating pairs would be Swiss franc JPY, Euro JPY, right? Literally talk absolute correlation, Euro JPY, Swiss franc JPY. That's very interesting, right? So I'd actually have to back test it. But to me, the structure definitely looks the same between AUD JPY and pound JPY. But these small things, guys, these small tools are so pragmatically important. They really, because if you can clearly spot a trading idea on one pair, it doubles your risk because if you're wrong on the analysis on one side, then you're obviously going to be wrong on the two charts. But if you're right, then you're right. And again, trading is a probability game. So you decide your odds, right? But yeah, I find this interesting, right? So ADJPY, sell profile asset. I'm just going to draw the most recent legs. I'm on the 1 year chart or 1 year time frame. So each candlestick represents 1 year. Banks think in 1 year. All right. Sorry, in 3 months, take profit in a 1 year and a 10-year plan. And this is what you're looking at here, right? So markets have been, really locking in an area since 1985. Again, sounds like AUD which was 1989. I mean, I'm not making this up, man. Look at this 1 year structure chart, right? And then look at AUD Just do the same thing or watch my previous video. You would be surprised, right? So clean supply, fresh touch, retest. And what do I know about my module one? My module one tells us that if you get a clean supply, your fresh touch will end somewhere here, always price, but will always come back. When price comes back, your retest will always run lower, right? That's what my module one tells you because you need to always know where price is going before it gets there so you can plan your exit, right? You can plan your destinations, right? So markets eventually find a major turning point, that supply and demand number one that we teach. There are different types of supplies and demands, different types of order blocks, different types of validation systems for each order block, right? Stuff that a lot of people won't tell you, but it matters, right? It matters. So if you ever see yourself trading and just trading on order blocks and always being stopped out, there's a big piece of the puzzle that you are missing. Right, so there we go. We've got the situation here. Markets found some type of major turning point in 2012. Banks think in 3 months, take profit in a year in a 10-year plan. So 10 years later in 2013 was somewhere up here. And markets have already made sure, right, that the uptrend is almost maintained, so to speak. A new bullish engulfing pattern, a tap into the zone. We had a fresh touch, retest. Well, what do we know about retest? They have a tendency to run a little bit longer, right? So if my calculations are correct, 2023, 2024, 2025, 2026 is going to look like this, but it's not going to be just a clean uptrend, right? But there's going to be a lot of consolidation, there's going to be a lot of retracements, there's going to be a lot of red candles, but the overall direction is the upside. There is no supply here where price is right now on the 12-month chart. On the 3-month time frame, I want to see the same thing. No supply where price is right now on the 3-month chart. There is a stop, a bus stop, a slowdown, a massive turnaround, a potential for retracement, a potential for reversal on the 3 months chart. But that is, the one I've just drawn right now is months to, a year or so away. And then there's this one that is around the corner, a couple of months away. Right. But right now, if you tell me right now that you see a sell trending price, I don't. I genuinely don't. I see markets just doing what they're doing. On the 3 months time frame, the 3 months presidential demand has been tapped and used. It's still valid, and this is what's controlling price. This, of course, and the fact that more recently, about 2 or 3 financial quarters ago, price then created a new demand. Don't act like you forgot. The demand is pulling the shots here, right? So, and that's what's doing. So we see this build up of a trend. Trends get built by money, right? They really work on this baby nice and slowly. And look at the clean distribution, right? So we do expect some type of impact on the supply. The supply will not be just a child's play rate, but right now that's all it is. On the monthly time frame, this is what you're looking at, right? The last monthly supply to try and slow things down was broken a long time ago. Markets allow consolidation, markets are digging up. There is no valid monthly governing demand right now, right? Unless if we do this and then we wait for the month of April to close. When the month of April closes and price is still up here, which it most likely will, then we can say that there is now a new governing area of value, and then we right the third financial quarter, or we can expect price to breathe and then come back down, get some touch, and then we expect this to happen. And this is how the year 2023 is looking to end, right? And like I said, for those of us who are really much into the order blocks and accumulated some buy zones somewhere here in January, 2023, and then again somewhere here. So this is August, sorry, last year. Here, what am I doing? There, January 2023. This is what you're looking for. You want to see this play out. You really want to see this play out, and then if not, then you want to start to accumulate here. But I don't see this strong sellers pressure on the governing time frame, 3 months time frame. In the weekly time frame, poor distribution, definitely a supply zone right here, definitely where price is about to enter and slow down. And this supply zone is what could actually cause price to do what? To come back and collect buy orders down there. The supply zone might be the actual reason. See what happens. But even on the weekly time frame, if you look at that structure and you look at fractality, you'll see that it's still in sequence, right? On the weekly time frame, we have the creation of this, right? So here we had the down traders coming in. That's why we bought our opinion orders were in there and bullishing off in pattern literally in January. Markets come back in January. This is where we execute, and then markets move up, pinning order set. And you can see in March a new bullishing off pattern was put in place, right? For those of you who missed out on this, it's still the same thing waiting for you. But on the weekly time frame, there's been a new one, right? 2 weeks ago, a new order block was created, right? All of this is to ensure that when sell pressure hits, there is enough resistance from the buyers, right? We'll see who wins. And on the daily time frame, right, as of Friday, the 22nd of April, markets are starting to react to the left. And I prefer to draw some structured trend lines here because I really want to make sure. So if you're loss, if this is right, you always make sure your stop loss is on the other side of this trend line. What I mean is, um, we generally don't expect any of these supplies to slow price down on the other side. And so if you wanted to buy, right, you want your zones in this protected area, stop loss on the opposing side of a broken trend. So stop loss this side. You want your stop losses out there right now, because anything goes out here in the wild, wild west. But I expect a trend to protect us, right? So this is good. Something like that is good. But yeah, price won't wait for Leroy. Please remember about by the time the year is over, 20% of trades that I could have taken, I don't take because of my rules, right? And that's one way to look at it. And 20% of the trades I'm referring to become profitable, right? So don't. But I like my rules like that. You need to make up your own rules here, right? But that's another valid area. So on the other side of this trend, but definitely could work. Your stop loss could stand the test of time here. It would mean you need to wait for price to first kind of like come back down with us with the trend here, and then see what it does, right? So buy area one, buy area two, and buy area three are the next valid buys, right? And we shall see. And if you get that impulse going in, you get a very good consolidation in that zone, and then sky's the limit for you, right? If this is where you are, then you got a clean 1:3. If it's a new time swinging, right, and that's actually 1:5. I apologize. New time swinging, then you really want to aim for these highs to the left here. If you've got two good positions going in, you want to take profit on this one, and then you want to let the other one run. Like, don't close until we get somewhere up here on the next supply, right? Hope you enjoyed this pound JPY. I hope I made sense. And if I didn't make sense, two reasons. Reason number one is because my pedagogy and my approach, I'm talking too fast. You don't like the sound of my voice, you don't like my cologne because you can smell it through the camera. I don't know what it is. Let me know in the comment. But reason number two could be because you just don't understand supply and demand. And these videos are not teaching you supply and demand. I'm doing a one asset analysis approach. And if you don't understand supply and demand, and that's the main reason why you failed to understand today, hit that link down below where I'm slowed down, where I work you through chat by chat, asset by asset, at a much more slower pace with all the rules, right? 365, shake my hand, and I'll see you in the next video.